Hi, everyone. Welcome to the very first episode of a new series that we are doing at Weatherwise, which is going to be basically building our own hedge fund. So I'm Josh Graham. I'm the founder of EHAB, which is one of the products is Weatherwise. I'm going to be bringing a business focus to this conversation. Not a trader, not an expert by any means. So I'm going to be learning a lot along the way. But I'm joined by Paolo. Do you want to introduce yourself?
Hello. So I'm Paolo. I am head of data science at EHAB. I've been working with finance in the past, but not as a trader. I've mainly worked with risk analysis and many other areas. I am a statistician with a PhD in applied math, and we've been developing this product from the past few months, and we hope to show you guys how exciting this can be.
Exactly. So I think the position we're coming from is that we've been working in the weather modeling space for about 5-6 years. We've been really focused on the construction industry, and that's given us a lot of understanding of complex dependencies. And we built a really exciting model in that space, but we wanted to try our hat at something new. We knew that weather really can move the markets in massive, massive ways. And so that's why we wanted to build out Weatherwise Studio, which is our new product. And a lot of the work that we're going to be talking through on this podcast series will be some of the features that are already in Studio, and also some of the features that Paolo is developing that will come to Studio, in the coming weeks and months. So maybe it's just a tiny little bit of background. One of the things that stood out to me when I wanted to start this podcast was realizing just how much of an impact weather has. So you probably all remember in Feb 2021, there was a massive outage in the Texas power grid. It was a complete, disaster where natural gas prices had a massive spike just in a small number of days. And there was honestly, obviously lots of suffering and economic damage that resulted from that. I think about $130 billion. And the reality was that a lot of this information was probably forecasted and available beforehand. So obviously it depends on where you're getting information from, but there was some sort of signal, but the market didn't really respond to it. So I think what we're seeing is that even though weather is such an obvious in your face thing, funds and traders still aren't necessarily factoring it in the best way or in the most accurate way into how they're affecting their trades and their modeling and the way that they want to do things. So it looks like that weather roughly affects about $3.5 trillion of GDP annually. And so, we really think that's an opportunity. There's a gap in the market. There's some alpha there that can be arrived at. Anything to add on that, Paolo?
Yeah, no, and I also, we believe that not only, weather has a huge impact on the economy, as you were saying, Josh, this is not always easy to see, right? Or to forecast, especially because, there are many, many weather variables that are taken from different locations at different points in time. And sometimes it's not just the values of the variables themselves, but combinations and comparisons between the variables and between current values and historical values, this kind of thing that might really give us the edge to understand what's the impact or the potential impact, future impact on the real economy. And this is what we are trying to do with Weatherwise Studio right now. It's not only giving access or easy access to weather data, but also starting with a layer of intelligence on top of that, studying many, many different ways of using these variables to create different indexes or signals, as we are calling them, variables that make it easier for everybody to spot the potential risks or opportunities that weather can give us at any point in time. So I think this is what is really exciting as well with Josh about this.
Yeah. And I think it seems like there's maybe 3 kind of fundamentals that mean that this kind of weather alpha, if you want to call it that, exists. So it's the information lag. Obviously the market is always reacting to potentially either known information about something that's going to happen in the future, or obviously something that has just happened. And so there's the edge in potentially being able to interpret and act on, the 3 to 15 day forecast, or maybe even further if you're doing, longer term modeling. Then there's the kind of information asymmetry problem where maybe a lot of people are just relying on airport weather stations or kind of weather stations that are more sporadically placed. And so it may mean that the true accuracy of the forecast information that you're getting is not directly aligned to actually how that's going to then influence the price of whatever commodity or thing that you're trading. And then there's also then the kind of the translation gap maybe of that information. So just because it's hot obviously does not necessarily mean anything, as you were just describing, Paolo, right? The layer on top of that is, okay, well, if it's hot in a small rural village somewhere, maybe that isn't going to have any real demand on the energy. kind of grid. But if it's, Dallas, Texas, that is having this massive heat wave, then clearly lots of people are going to be drawing down energy. So, heating degree days are a very, very common, obviously, signal. Everyone kind of knows that. But maybe the alpha that could still be found there would be, well, maybe we need to look at consecutive days above a certain temperature, or maybe it's a combination of variables where it's humidity plus temperature plus wind speed that then ultimately arrives at a more accurate barometer for that particular signal.
And also,
so maybe
historical gaps, right? And the time frames that we need to look at and analyze. So, which is what we're trying to make easy to do with Studio.
Well, I was going to ask, Paolo, obviously you've been building out all of the kind of the ground layer and functionality of Studio. So maybe you could just explain to us like a little bit about one of those signals and maybe then what we're going to do from here in terms of, how we might utilize that signal or what we might do moving forward.
Yeah. Okay. I think maybe a good starting point here is imagine. So right now, and everybody knows that we have this huge artificial intelligence and machine learning machines, right? Or algorithms that would essentially what they will do is that you give it a lot of raw data and it searches for combinations of that raw data that can be good predictors for anything you're interested in. The thing is that you are searching in a very, very huge space of possible functions, of possible combinations of these raw variables. And you need a lot of computing power, a lot of time, and really getting the details right of the training algorithm and everything so that you're able the algorithm is able to find these best combinations. What we're trying to do here at first is maybe save some time from that algorithm by using specialized knowledge and backtesting and research on the impact of weather on the real economy to create this first like shortcuts. Because instead of just searching for combinations of weather variables in this vast space of possible combinations, what we do first is we set up a lot of combinations of weather variables that make sense to a specific area or to a specific business or in a specific use case. So we are developing this, what we are calling signals, which are these functions or combinations of weather variables that are relevant to different areas. So we are doing this for agriculture, for energy transmissions, for energy demand, for all sorts of things. So in a sense, we are cutting short or creating shortcuts for this machine learning algorithms, which of course are useful and that we are going to use them as well. But instead of just giving them the raw data and let it search kind of blindly through all this huge space of possibilities, we are just giving it a few combinations that we know are relevant. So this is the first layer that we are introducing, which are the weather signals, which will be accessible through Studio for any locations. And then there are also other features that are important here. For instance, weather is important for any given, for a given variable or a given problem, but weather where in the planet, right? So we are given the ability to calculate those variables in different locations around the world so that, of course, regarding the problem at hand. So if you're talking about, for instance, corn futures pricing, corn trading or soybean trading, we know where the big farms are located. And this should be the places where weather is most relevant to the future outcome, right? And yet on top of that, there's other different things like the lag. So if we have a drought on the United States near the corn plantations right now, so how long does it take for that to reflect on prices? So this has to be also with market efficiency, right? So what's the speed of the information? And this is where we expect to see some weather alpha, as you said, Josh, right? Because it takes some time for people to realize that, okay, there's weather, how bad it is. We can look at the temperature and the precipitation at this location, but for instance, how severe that drought is or is supposed to be. And this is why we're also using, after we create these combinations of variables, we are going to relate or analyze them or the values that we are forecasting for these variables in comparison with the historical values. And of course, considering at which time of the year you will have the most impact. So is it harvesting or is it seeding or what is it? So we can look for this time lengths as well and use them. So combine this weather signals in many locations and past values, compare the forecast or current values with historical so that we know how severe weather is right now. And at the end, at the top of the layer, the final layer is to understand how in the past the severe weather conditions affected prices, and when, how long did it take for the weather information to spread and reach the markets. So we are hoping to make all of this really easy to do. And then, of course, at the top, using machine learning algorithms and neural networks and other kinds of analytical tools that we are going to talk about in this series to really leverage the prediction or the impact that weather has on prices in order to make it the most actionable data as possible and creating really actionable insights. So I think in a rough form, this is what the analytical layer we are building. This is how we are conceiving it. So first, combinations of weather variables that we know that will make sense, and our research shows that they will affect different areas of the economy, combining them across many locations, understanding what's the times of the year and what are the time lags that are most important for a given indicator of price, and then combining all of this using machine learning to actually create trading signals, for instance, or calls to action, right? So make it really actionable, and in a really easier form for the final user who's not a meteorologist specialist. I think this is the main lines of thought that we've been following from the past few months, as Josh said, using our knowledge that we accumulated throughout these years, working with weather especially on construction. So this is what we're doing now, and we are really excited, right, Josh? We think this can really help our customers reach and take advantage of this weather alpha.
Well, totally right, Paolo. And I think what the key thing I'm hearing from what you were just talking about is that, through this series and also on this journey of building Weatherwise Studio, what we're going to be doing is going from more obvious to less obvious, less complex to more complex. And so if you start on episode 1 with us, right, like maybe in the next week or so, we'll be doing maybe some obvious trades, some obvious things that, probably many of you, if you're already traders, maybe have considered or thought about, right? HDD, CDD, drought for crops. Those are all more understood things. It doesn't mean there isn't still alpha in those trades, but they are much more understood by the market. But then we might move towards things where you're combining different signals together, where you're maybe looking at, port downtime, which feeds into whether your material can actually be shipped or not. And that then has a further implication on whether that signal is is a tradable signal or just some noise that you maybe don't need to trade on. And then, of course, obviously, starting in the next couple of days, we'll be looking at some of the simpler features on Weatherwise Studio, things that you can literally start using today if you go to weatherwise.studio and log in. But obviously then Paolo will be actually learning the lessons through this process, which is why I think it's going to be really fun. And then integrating those learnings into the system so that, let's say you are a mid-sized fund who maybe doesn't have the in-house capability of hiring a whole meteorology team. All of the hard lessons that we've learned are already going to be baked into those bits of software and the features that you can then just pick up and use, right? And of course, there's always going to be, and we're not saying that there's any magic sauce in the software itself. Obviously, as the expert traders, you're going to be the ones who are going to want to actually play around with those tools, back test, look at information, and you'll be making the decisions for yourselves. But, it's clear that having more sophisticated tooling is obviously going to massively speed up that process. And so we hope that it makes a lot more people a lot more able to find some of these hidden pockets of benefit that they may be able to trade on. But I'm excited, Paolo. And I think, maybe as we're kind of wrapping up this episode, we'll talk a little bit about the fact that what we're gonna do to start with is just maybe some really basic tests and training, so that we can, in the next episode, show some data on the screen, a little bit about, what research you've been doing. And then it may be then, kind of episode 3 and onwards, where we'll actually have like a paper fund. So our aim, right, is to have kind of $1 million, then be making trades and maybe doing some research. And of course, we don't know where this is exactly going to go. So we may decide to change things as we move forward. But yeah, we hope that it can demonstrate the wins that the platform and the work that Paolo is doing enables, but also to talk through the failures. So I'm absolutely certain that it's not going to be some golden ticket, Paolo, where we just, instantly find alpha in every single place that we look. But I think, you and I were talking about this just before the episode. probably just that process in and of itself is going to be highly valuable for us and also for anyone who's watching. So yeah, I don't know what your kind of thoughts are on the next bit of research that you'd like to bring to maybe the next episode and kind of your thoughts on that.
Yeah, absolutely. So, no, you mentioned, of course, there might be some alpha on the way people trade right now, or without regard for weather. So I knew a guy once, he worked with me on a risk management company. And what he did, he was trading for himself. And he just used like a very simple strategy of moving averages. And when the shorter one crosses the longer one, he will buy. And then the other way around, he would sell. And he used the historical data on an Excel sheet to optimize the length of those moving averages. And he could get some reasonable returns with that. This is the kind of thing that we are also trying to research is these trading strategies. And maybe we would like to just start simple. And apart from the price data itself, right, which has a lot of information, of course, we know, but just start using these weather signals with simple strategies at first to see what kind of leverage they will give us and what kind of value is there in just like using a simple predefined weather signal and using it for trading. So, and moving on from that, and then starting to, as you said, combining, because there's several ways that weather can affect, for instance, commodity pricing, right, or energy pricing, because you have the supply and the demand, you have the transmission, you have transport, right, as you said, you have railroads and ports, and weather impacts all of these points in the chain. And we intend to, as we move from one episode to the other, to incorporate more and more information, weather-related information that is relevant to that price or to that market we are going to trade in. Yeah, we're not sure it's not, as you said, it's not, we're not saying that we are going to guarantee you any return, nothing like that. It's just more, we are putting our skin in the game to show you guys that we believe that weather is relevant and there's alpha to be obtained through weather, and that our platform makes it easier. And we are just going to be showing the process, or how do we would use it for do the trading and how it can be used. And we hope as well that in the process, it might be nice to get some feedback as well. If you guys that are watching have any questions or suggestions on what do you think that the tool might also have, it will be nice, because we are going to be learning some things that we are going to add to the platform throughout this path. By the end, we hope to have like a very robust and rich analytical tool on top of everything that we are building. Because, as I said, again, not only weather raw data and then transforming it into meaningful signals. And then we know that these are time series variables, and climate has a very seasonal pattern, right? Weather variables, and extracting the information from the weather dynamics as well. So what's happening to the dynamics, and if we can spot something that is unusual in that dynamics, that might be something that we might use and might be of interest. And we are going to use a few techniques. I've been studying statistics and signal processing and time series analysis from the past 20 years. And I'm going to be incorporating many, many different techniques that I've learned and that I've studied into this project. And we hope to be able to show you guys how they can be used, what are they good for, if they are any good, and build with all of these components, build this analytical machine on top of weather data that can help evaluation and evaluating the impact of weather in the real economy. So I think, Josh, this is the kind of the path that we are starting today, right?
Exactly. So close out episode 1. We're really excited about this series. We think there's going to be a lot of value here. And as Paolo said, if you have questions, if you have feedback, please talk to us. We'll be turning the notes from these episodes into a Substack newsletter. So if you prefer to consume it that way, then you can, and probably then we'll add a little bit more detail into some of those notes, especially once we start getting some graphs and charts that we'll be showing on screen so that you can interrogate those things. I think the final thing is that, we really believe that weather alpha exists because people aren't using data in the best possible way. They're not doing it in as sophisticated a way as they could and should. And also, of course, the thing that we haven't mentioned, Paolo, is that climate change is creating a lot more volatility and a lot more different compounding pressures that obviously are meaning that things that maybe weren't such a problem in the past from an agricultural perspective, maybe talking about heavy rainfall or drought, now are becoming problems where you can then, see some return on a trade that you might make in that regard. So, we think this is a really important time to be taking the weather data problem in trading much more seriously. And hopefully this series is going to help you do that. And I should say the final thing is, this is not advice. We're going to be putting disclaimers, of course, everywhere. We are doing a paper trading. We're not looking for investment. We're completely just doing this to show you guys and demonstrate the power of our tool, which you can find at weatherwise.studio. You can log in and start using today. And of course, helping develop out that platform as well. So thanks everyone for listening. And I don't know, Paolo, a final thought for the folks.
Yeah, and hopefully maybe if you guys subscribe to the tool, you can do the exercises we will be doing here. You can replicate them in your own environment and maybe tweak around and play around and see what else would you like to do differently from what we are doing. So please take a look at the application or at the app and feel free to use it and start your own work on the subject. And I think that's it.
All right. Well, thanks everybody. Thanks, Paolo. See you next week for the episode 2. See you.
Bye-bye.